in secondary locations throughout South Africa. It was established through an unbundling of a portfolio of 98 properties from Redefine Properties, and that was in November 2011. Arrowhead has two classes of stock, A's and B's, a market cap of 2.8 billion rand. Recently, it acquired a significant retail portfolio. Do you want to kick this conversation off, Evan?
It's actually a residential portfolio, which is very different from many of the things we've seen. In the South African markets, it really was only Octodec that had any exposure to residential. These guys are going, head first into it. They bought a sizable portfolio, just over 400 million rands worth of residential units.
Just solely residential?
The new acquisition is solely residential. They never had any residential before, but again, you spoke about secondary assets they're buying, but it's really more than that. It's a balance sheet play. They're buying high-yielding product with low cost of funding, and they bought this residential property at just over 10%, growing at 8%. They actually got rental guarantees for the next 2 years of 8% growth. So they're really playing their strategy of using balance sheets, cheaper funding, and buying high-yielding assets.
So, Paul, this is interesting, something different.
Yeah, it is. It's always been an interesting company. Gerald Leisner, the CEO, was one of the stalwarts at Redefine, and he's taken this thing on. His Eager Beaver CEO or COO is a guy called Mark Kaplan, also runs about and gets very active. And I think Evan's put his foot in it. They have, his finger on it, in fact.
Watch out, don't put your foot in it.
What they are is they've got a nice profile in investment markets. They've got the two classes of shares, which also creates additional interest. But they are buying assets that other people might regard as a bit, too toasty, and putting them in, and it all adds up to quite a nice diversified portfolio, which then in turn lowers the risk. So certainly one that I think deserves some closer examination.
And just looking at valuation there, it looks as though we're off any all-time high, Evan.
It has been under a little bit of strain. There is an A and a B unit, and for our perspective, the B has got a higher growth exposure and is looking quite favourable as stocks go.
I just want to ask Evan a question, and that is, how does this thing with the residential work? I mean, we're not talking about a bunch of houses in Highlands North. We're talking presumably about blocks of flats. Where are they, and who did they buy those properties from?
From several vendors. There's the guys that have been building up, especially in CBD areas. We call it high-rise, low-rent. You've got multiple units in a single asset, and you just got to manage your collection process. I think it's less about the assets and more around your operations with regards to collections. And they've managed to construct, with efficiencies and effectiveness, a sizable enough portfolio where they can achieve just that.
Is this all over the country?
No, it's really focused on Gauteng at the moment.
Sounds like a Hillbrow to me.
High rise, low rent. I'm going to use that in my next property discussion. Are we going, gentlemen, to hot or not on the stock?
Just one clarification. Could Evan just explain the difference between the A's and the B's and what kind of investors they appeal to?
Okay, so there is an A and a B unit where the A gets preference to a certain distribution and then growth beyond that, but they won't. And the B unit takes, I would say, over and above their limited growth of. It's different to a normal A and B unit, but let's just say the A has a great exposure to the upside, whereas the A units will have preference to the distribution up front.
So bottom line is A better than B?
Not at the moment. Current pricing, I would stay away and say not for the A's, and I would be hot for the B's.
Well, it confuses me. Anyway, so that's the hot call here. Hot on the B's and not hot on the A's. Yeah. Can you follow that, Paul?
Yeah, no, that sounds sensible, because of course, if the A's have the preferential distributions, then those are going to be a little bit more low risk. But in good times, the B's could be potentially very exciting. So if Evan's hot on the B's, then so am I.